these founders got, for example, overwhelmed by the complexity, because suddenly, you run a company, you have 30, 40 people. I mean, you wake up, you have 400 emails in your inbox and, things left, right, center, regulation, fine. So sometimes I'm surprised, this is on the negative side, that these founders who are so smart, right, can't deal with complexity.
So hi all, very warm welcome on Oleum. So again, I'm with my friend Marcus. Marcus, hi.
Good to be back.
So on that session, we are super happy to be joined by Matthias Winter, so the general partners of Constructor Capital. Matthias, hi.
Hey, Matthias.
Hey, good to see you, Marcus, Thomas. Hello, good afternoon.
And very nice to have you on board. So we essentially can't wait to dig into your past. You spent 20 plus years at McKinsey, so you left when you were a senior partner there. So it's, I'm sure you've seen things. And then you essentially became like an entrepreneur yourself, in the sense that you set up Constructor Capital. Most people often forget that launching like an investment platform is also like a venture. So really curious to understand, what pushed you to the investment world and to understand the genesis. Really like simple question to start our chat. In 2 minutes, do you think you could paint us the profile of Constructor Capital? Who are you? What are you doing? You recently raised like your first fund of, I think, 100 million plus. But yeah, I'll leave you explain all of that. Would be a great intro.
Okay, amazing. Well, thanks for good questions. Look, background, so studied computer science, economics, joined McKinsey in 90 Zurich, Switzerland. From the beginning, I wanted to do tech work. The best proxy at the time in McKinsey was probably telecom and tech. So I worked for many, many years for big telcos, for tech companies, software companies, etc. And obviously, clients of McKinsey are large corporates, as you say. It's not startups. However, I was always interested in technology, and a lot of interesting technologies obviously come from new companies. When I started 97, internet wave, mobile wave, cloud wave, all that was still ahead of us. Many of the innovations did not come typically from my clients, but from other companies. So what I did is, number one, there was here in Switzerland, there was a bit of a theme that we should establish more startup companies in the country, and we launched a competition called Venture, which was launched between McKinsey and ETH. ETH is the largest or the most important tech university in Zurich. So I was leading that for a couple of years. Basically, was an accelerator type of program, and I got to know more and more startup companies in that context. I was also on the board of a VC fund that was co-created by McKinsey together with a bunch of corporates in Switzerland, also to basically promote entrepreneurship in the country. And I was a board member. And again, I saw a lot of startups. So really liked that part of the world. Was also doing a couple of angel investments to make the excitement even bigger and to put some money where my mouth is. Some of them worked, some didn't, but overall, I had a lot of fun. So for me, after 26 years McKinsey, it came natural that I should do, not board memberships or, I don't know, education, university or something. I wanted to do tech. So that was always the idea. And, one of my clients, normally we don't talk about clients, but one of my clients was a company called Arconis. And the founder of Arconis is a gentleman called Serge Bell. And, we liked each other. And he asked me, if you leave McKinsey, Matthias, why don't you start with me this new venture fund? It's going to be called Constructor Capital, because he built like a bigger group called Constructor Group. You can be the managing partner. And we launched that together. So that was a bit, that was for me also the moment I said, look, now I need to leave. This is what I wanted to do. Fantastic offer. That's the moment.
So you essentially decided to leave McKinsey even before you had like Constructor Capital in mind.
Yeah. It came about at the same time. In McKinsey, you have certain life cycles, and somewhere around mid-50s, people ask you to slowly retire. So it was the moment.
No,
So
makes sense.
good things come together, certain paths intersect.
No, makes sense. And so essentially, well, you've seen like both worlds, let's say, like the very established companies, startups too. What would you say you learned from your time at McKinsey that is super helpful with startups today? Because I mean, generally speaking, people really draw like a very hard line between, big groups, startup world. But I'm sure, I mean, you have like to learn like on both sides of the fence from your experience with McKinsey. I mean, what is essentially like maybe like the 2 or 3 things you believe are super helpful, when you invest and coach?
Yeah. Look, I mean, obviously, what you learn when you serve big corporates is how difficult it is for them to innovate outside of their core business. It's just difficult, right? Because best people work on established businesses, established technologies. They do incremental improvements, and it's very, very difficult to change things. Even if you take my software clients, they're more agile typically than other clients. But even for them, it's very difficult to change. So, I mean, you see why smaller companies, smaller groups, startups, which have 100% focus on one topic, are more successful. At the same time, you learn also that in reality, very few people, even in McKinsey, you learn that, and with the corporates, very few people can make a difference. So it's you don't need hundreds of people to make a difference. I mean, even large corporate organizations, they're typically a handful of people or 2 handful of people or a dozen of people who really make the difference. So it's quite interesting. I mean, they have 10,000s of employees, but the people who make a difference is not such a high number. So if you get them to get together, if you get them aligned, wonders can happen. That's the other thing. And this is obviously what we bet on if we invest in new companies. Third thing that, and even within McKinsey, it's a bit the same. Small, at least in your small universe, McKinsey is a big firm. Few people that you work with can make a big difference for clients. So that's maybe the second thing. The third one. So I was co-leading the tech council in McKinsey. That was pretty good. I mean, we knew where bets and technology would go, etc. So that was something where I learned. I mean, you have a forward thinking how the world will evolve, and obviously McKinsey takes a bit of a commercial lens on that. How technology will change the world and what it means for our clients, etc. So I learned some things there. Yeah, that's maybe 3, 4 things that I took along. But yes, it's different.
I mean, thanks so much for talking through your background a little bit more. And just on the McKinsey Technology Council side, so you just mentioned that as well. So how does that shape, I guess, in particular, how you make your investment decisions?
Well, okay. I mean, this is 3, 4 years back that I was on the council. But and the big discussion of the council was always, what kind of technology has how far in the future and how big of an impact it has. Obviously, the one that overtook everything was AI, and we were discussing that already as one of the disruptive technologies. But we looked at many technologies like robotics and biotech and all this kind of stuff. The one that I really liked early on, and I was really fascinated by, and that led a bit also to what we're doing in Constructor, was actually quantum physics and quantum computing or quantum technologies. I was even leading a special initiative in McKinsey that focused around quantum technologies. I always thought, this is something that truly can be disruptive and can truly change the world. So that's, for example, one technology that I got excited about. Other one that I got excited about is space, and we see now, how fast the world of space is evolving and might even converge with AI in some sort of way. So that, it made you aware of trends, and I got more excited about certain technologies than others. So robotics, for example, I could never relate that much to, but so I spend more time on those that I really like.
Yeah, and is there so what I guess in terms of your your experience that you gained from there. So what would you say, is there anything that you say that you did not know about VC or venture capital when you started that maybe you wished somebody had warned you about before going in?
The failure rate.
Yeah.
Failure rate, and you always think it's a great job, and you meet so many great entrepreneurs, and you invest in great companies. I mean, we have a portfolio of about 20 companies by now. I mean, you spend 80% of your time on the companies who are not doing well. So, I mean, because the winners, they take your money, you're happy, and they want to see you from time to time in the board, and maybe you can give them on the back, and but in reality they don't need you. So that's one learning. If I take up my portfolio, at least existing portfolio, I spend a lot of time with the companies who need to win. Second, obviously, there's also a lot of administration. I mean, setting up a fund is not that straightforward. I mean, we have a bit of a sophisticated structure. We have a Cayman fund. We have a Swiss asset manager. We have a license from FINMA. All the admin work that you don't need to do in McKinsey, like, getting audits and quarterly reports and all that stuff actually takes a lot of time. That's
becoming. I mean, we had someone on the show who was describing this as the cost of doing business. So if you work like for a big company, well, I mean, you have certain type of cost, which is probably like bureaucracy, politics, etc., which is a cost to do your business. If you are independent, you have other costs. I mean, doing your own accounting is one, which is not necessarily super fun to do. But yeah, welcome to the world of entrepreneurship. In some way.
Exactly. I mean, we have a great team, but I still spend a lot of time on it.
But I mean, it's interesting because even now, like, I mean, because I had the feeling that now, like, setting up funds was something much easier than before. Like, I mean, you have like the Carta round table of this world where literally in 3 clicks, you create like an SPV or a fund even. So even with all those like tools, it's still... You find it still...
I mean, the tools help, but I mean, a lot of it is regulatory work. I mean, we're a regulated entity, right? I mean, the cap tables, yes, we can put them in Kata. We can also leave it. I mean, the cap tables are not the thing that keeps me most busy. It's more the regulation around the entity. I mean, we're dealing with other people's money, so we need to be very serious about that. So,
yeah, no, of course. So maybe like to come back to Constructor. So you described yourself as being like a science-first investor. I mean, do you think you could elaborate a bit on this and maybe touch base on, like your investment thesis, really? I mean, what sort of companies you focus on? I mean, I know you cover EdTech, you deep tech, AI as well. So if you could elaborate a bit on your current strategy and thesis, that would be would be quite interesting.
Okay, cool. Yeah, so basically the fund is set up as an early stage VC fund with 3 verticals that we want to invest in. One is deep tech. I'll come to that in a second, what it entails. The second one is software tech. And we don't want to do broad investments in all kinds of, consumer software, fintech, etc. It's really only a certain subset of all software companies. And the third one is education tech, edutech or science tech. So, and the order is probably 60% plus of our investment goes in deep tech. So in deep tech, what we're interested in is everything around future of compute. So we're looking at all new modalities of compute. So from GPU to photonic to neuromorphic to quantum. Obviously also, memory, compute memory, communication, etc. So that is one big theme. We're looking a bit at the edges, at new materials, but only at the edges. It's a smaller part of the investment. But future of compute, I mean, it clearly poses a big challenge. If you look at AI, we need more efficient and better and faster computer, and this demand won't go away. And then and we know a lot about it. I mentioned before, I did some work in quantum, and we have a very nice portfolio of quantum computing companies, but also photonic computing companies. So that is really one key theme, and it's also a theme for a VC, that's very rewarding because very few VCs actually have the expertise. So we are very close to the leading, let's say, top 100 universities, maybe 50, 100, somewhere there in the world. We're very close to the research groups that work in that field. And we try to find companies in, even sometimes before they're being founded out of these universities. And very few people can do the technical due diligence. So that is something, if you're an expert in this field, where you can make a difference and where you have also a competitive advantage because many VC funds don't dare to go in that space. And then in software, what we do is mainly B2B software, typically system-related software, middleware, etc. Often even related to the future of compute. So software that helps there, not 100%, but often related. So it's more infrastructure software with a real tech angle. We're not going to invest in software companies where the optimization of your Google spend is, the main factor of success. We're not good at that. And then education tech is a third angle. It might sound a bit random, but it is not, because I mentioned before there's a bigger entity called Constructor Group, which is on top of Constructor Capital, also founded by Serge, and it entails, next to our fund, a software company called Constructor Technology that works in the edtech, software tech, edtech, science tech space. And Serge is also owner of the largest German science university. It's a university in Bremen, Germany. It's called Constructor University. And obviously, there's a bit of a cycle. We have our own software company in education tech. We have a university online. We have also offline, but also an online university. So we can test software. We can basically help each other in the group. So that's a bit of a third angle that we're doing. But the core of it, I would say, the real big focus of our investments is at the moment in deep tech, future of compute in a broader sense.
So you have a large network of, I think, quite a few researchers, and you've got like 50 universities, including, a few people with like Nobel Prizes and some very experienced individuals. How does that network change the way that you go through due diligence, for example, compared to like a traditional VC?
Yeah. Look, if we invest in deep tech, typically you don't find, 3 founders who have a great idea out of nothing and say, we're going to build company X, Y, Z, and we conquer the world. So typically these deep tech companies, they are created from doctoral or postdoc students out of university groups, because it's cutting edge research. It's a combination software, hardware. It needs expensive machinery. It needs experiments, years and years of experience. And as I mentioned, it's difficult to do due diligence there. So we know people who publish papers in the areas that we're interested in. We travel around the world. We go see them. We see the postdocs or doctoral students that want to create a company. We discuss with them. But then, due diligence is very different, right? You need to not only judge the founders, that is obviously also important, but even more important is that technology promising? Because obviously, if you're in a university, you can do research in all kinds of directions, and the purpose is maybe publishing a paper does not necessarily create a successful company. It's professor says the direction, and then they're doing work there. But if this results in commercially viable companies, it's a different thing. So we do typically relatively long due diligences. We're not, if somebody asks us, well, can you take a decision in 4 weeks? Typically we can't, because we will ask we will do our own due diligence, but we will ask our entire network and all the professors that we met, because, it's a bit of a, obviously, network that we built there. And we will judge the chances of success really thoroughly also on a scientific paper. So that takes time.
And how do you judge the commercial aspect? Because from what I understand, you would go after teams of researchers, like identify promising new technologies. How do you then essentially assess the commercialization potential? Because it...
Yeah. At the end of the day, if you have, if you build a faster computer, the market is huge. So I will not spend a lot of time on, TAM and SAM, etc. that is
So
not
it also
really
depends on price, I would imagine, because
exactly,
if you have
exactly. So I look at the technology and I look at the cost curves, right? I mean, that's at the end of the day the key question. Can this technology go down the cost curve faster? Then that's the commercial question, right? The market is big. I will not stand.
So nowadays, I mean, do you also assess like supply chain? I mean, I have no idea how you build like a quantum computer nowadays, but I would imagine that you have bits and pieces like coming from all across the world, probably a lot from China. Like with our current the situation, in the world, which is becoming more and more, let's say, local with sovereignty everywhere. I mean, do you also assess the risk in the supply chain, because you might identify like a very strong technology, and maybe you identify like some strong commercialization potential, and then do you look at, okay, if we need to reach that scale, it means we need to import X tons of products, and that there might be a risk there too, or
No, yeah, obviously it's a very valuable concern. I would say for us who come at late seed Series A stage, it's often not our main concern, right? I mean, these labs, they buy obviously technical equipment, they buy lasers, they buy optical equipment, they buy, they use obviously fabs. So some universities even have their own fabs, etc. And, for us, the question is at the beginning more, do we believe the technology will work? Do we believe they can go down the cost curve, can be cost competitive at a reasonable point of time? We don't worry at that stage yet, can they get a good contract from TSMC in Taiwan? And what is the future of TSMC versus Chinese chip manufacturers? I think it becomes a more relevant topic, when the companies are
later
further.
on?
So, yes. I mean, we discuss, well, for example, we're investing now in a company that does augmented reality. So it's a new type of these meta classes, and with lasers, etc. Obviously, there the question is, how do you manufacture that? And, do you have the right contacts in South Korea or Japan or wherever the supply chain comes? And we try to help these companies. But I'm not sleepless right now about bottlenecks on supply chain. If they start scaling, I'm happy. My business case works.
Okay, so it's essentially a good problem to have. Maybe, so you mentioned like new software, so not the typical like marginal improvement kind of software, but software like managing like super complex workflows. For a person like me, would you have like a very concrete example of something you've invested in, or maybe something you've looked at to give like a sort of concrete and radical example
Yeah, for
of
example,
what it means?
one very technical software, I give you an example, is a company called Cruise. They're a German company. They were founded by an Israeli entrepreneur and two professors, actually, three professors. And they basically developed a software with which you can calibrate quantum computer equipment, because they are very fragile, right? Computers, they're very sensitive to noise, etc. And a big part of any company or research group that wants to build these computers is to constantly recalibrate that. And typically you hire PhD students or people with a PhD. So it's very expensive people that you will deploy in order to calibrate them regularly. We develop, they're developing a software. So that's a typical example of a company, a software company that we were interested in. Outside of computing, for example, we're looking right now at a company that uses quantum algorithms to basically condense large language models. So basically models, AI models, to make them easier to use, faster, easier to use at the edge, less energy consuming, and they build algorithms to basically make them more efficient and don't lose too much information, while at the same time cutting the complexity of the models. It's another example. So this is the kind of themes that.
Yeah, two examples of products you can't really imagine in 30 minutes, really.
Yeah, and you typically don't. I mean, to be honest, we also invest a bit in, if it's a B2B software, we have, for example, very, very good investment in a B2B software company in Singapore that builds that basically facilitates administrative. It's a simplified ERP system, accounting, administrative processes for early stage companies. And they're mainly active in Singapore or in Hong Kong. It's a bit untypical, but we knew the entrepreneur and we liked it. So we're not that 100% religious, but the first two are more typical type of.
Okay. So in terms of like your, let's say, positioning in the VC world, so I mean, most VCs, like generalist VCs, would focus essentially on software, so low capex kind of companies. And you essentially, it seems that you are looking at businesses which most of the times will require much more investment into hardware. I mean, what do they get wrong? What do you get, things right? I mean, where do you see things moving to? I mean, I'm asking because, I mean, we've had like an investor like earlier, essentially like focusing on more or less the same sort of topics as you are. And he was essentially explaining that in our world, you have like, the VC world, like focusing on, I mean, the sort of more traditional pieces of software, private equity investor focusing on more mature businesses, but you don't have much in Europe focusing on companies that will require more hardware investment, which is somewhat of a problem if the main topics of the moment is how do you reindustrialize Europe. So yeah, where do you position yourself in that world?
No, I mean, you're 100% right. I mean, there are not so many VCs in that space. I mean, more are moving there, but that's right. Capital intensity, I think you asked about that. Yes, they tend to be more capital intense, but the kind of companies that we invest in are not crazy capital intense. Often they start out of universities, good universities like Oxford or something. Typically, there's a tech transfer office. They allow you to use, the university equipment still for a certain period of time. Then they need to build their own equipment. And yes, they might need, in the first year, 10 million and then 20 million, 30 million. So it's more than software, but it's not yet. I mean, we're not investing in companies that want to build nuclear fission reactors or something, right? That requires tremendous amount of money. So it's still doable, and very, very often as I said, look, the truth is there's a lot of money available for these kind of companies, but very few VC funds have the ability to do the due diligence. So once we invest, you get a good due diligence report as the entrepreneur, you can get a lot of money from government institutions, from French, German banks, from European banks, etc., from other more passive or VC funds that want to invest. So often what these companies need is they need a nucleus investor or core investor who gives other investors the confidence that this technology could be viable, and then you can raise the money. I mean, it becomes a different story, at later stage about then as a challenge for Europe. But in the super early stage, you will find the money. You often don't find the person who can do a credible due diligence so that others would jump on the wagon.
Yeah, thinking a little bit about sort of the general market trends and a little bit about the competitive landscape that we're seeing at the moment. I mean, obviously, everyone is talking about AI as such like a big factor within the investment space, and I guess specifically in Europe, I think it's the biggest venture sector now. It's like overtaken fintech. So, what do you think this says about where the market is headed, and specifically Europe is headed in terms of the next 10 years?
Look, I mean, if we're honest, the biggest European AI company is called Mistral, I guess.
Yeah.
If you talk French, right? If you talk to people in the field, they will say, yeah, it's great that we have a European company, but it's not as good as the other models, unfortunately. So, but obviously AI is changing the world. So it's natural that more companies are being created in AI, and they're good companies like Lovable, etc. So I think it's good that Europe does more on AI. Am I super optimistic that we will overtake the US or China on AI? No, I'm not. But we might find interest. I mean, I think I'm more optimistic actually on deep tech. but we will find interesting niches and applications, etc. But I mean, there's just more capital in the US. There's, more drive. Entrepreneurship is still valued much higher in society, and obviously same China.
That said, recently Yann Lequin just raised like 1 billion plus for his new venture. So maybe that would be the one breaking through.
Which one? Sorry.
No, Yann Lequin, like the French AI researcher.
Yeah.
Like,
but is he doing it in Europe or US?
yeah, in France. Yeah, it's. I mean,
He was
made.
doing it in France.
Yeah. So it's
that is
some hope.
That, for example, I find exciting. I mean, it's a person who truly knows what he's doing, right? I mean, he was head of AI in Meta. Obviously, has a fantastic scientific track record. Raised a lot of money. That could be a success, right? I mean, and it's not government related, and it has the higher right intrinsics. I would be excited if he had asked me to invest in it. I'd be excited to join.
I mean, then it's really in terms of like expected returns. I mean, I don't have like that, powerful essentially brain to understand what sort of returns you can expect by investing at the seed stage in such a big round. Because like to make like a 4-5x, it needs to really like be absolutely extraordinary, which I hope they will be. But yeah, as an investor, if you are being a bit cautious, I mean, I don't know how I would look at the investment opportunity really.
Yeah, I mean, we tend to be rational investors, so we're not investing. So this is why we don't have too many AI companies in our portfolio, because I'm not into the Excel model and what is my NPV, but I need to somehow be able to relate, what pre-money valuation I get offered versus, how much work or, history and scientific base and human went into the company. So, even though I like the story, he's a great guy. Would I? Yeah, I don't know. We tend to calculate before the investment.
So going back to deep tech, I mean, do you see in Europe like specific hubs that would emerge? Like if you had to bet on maybe a few cities or maybe like specific countries, I mean, where do you see, like the main like deep tech hubs in Europe?
Yeah. So, I mean, it's the typical suspects, right? I mean, and it often links to universities, right? So you have London with Oxford, Cambridge. Then you have a few universities also in London itself. They're good companies coming out of there, and especially on future of compute. Then you take Paris. Obviously, you have Le Curie. You have a bunch of universities that come from there. We're going to do a big investment now in France. It looks like so. Get more excited about the Paris landscape. Then this big cluster, obviously, around Switzerland with Lausanne and Zurich. ETH, EPFL, very, very good university. Many spin-outs and many successful ones. Munich with TUM. So there are no big surprises, right? The clusters are around the leading science and engineering universities in the world. For example, for deep tech, Berlin is, for example, not important for me, right? This is more software, etc. So.
No, makes sense. Makes sense. And so your former colleagues at McKinsey, I mean, just published like a report, arguing that Europe's deep tech ecosystem could generate like $1 trillion in enterprise value. And around like 1 million jobs by 2030. As someone who is in the inside now, like, I mean, what's your take on this? Are there realistic numbers? I mean, is it something
Personally, I don't like these studies too much, even though I love McKinsey, but I don't like these studies too much because it's often highly speculative calculation. It's also always a bit the question, what is in scope, what is out of scope, how do you calculate it? Do you, is it only the startups that create that many, or is it like the entire ecosystem? And how do you calculate economic impact? Is it only revenues from the companies that come out of this sector, or is it broader impact, or is it indirect impact? If you build a better computer, is it that you can do smarter things which create economic value with that better computer? So it's a big number. Is deep tech important for Europe? Yes. Is it an area where we need to be super relevant? Absolutely. Is it an area where we need to catch up? Yes. 1 million jobs, maybe, but yeah, as I said, personally, I don't like these
Okay,
studies.
so the direction is right, and then no comment on the actual numbers.
Yes, and I would, I mean, it creates nice headlines. Personally, I don't think it creates a lot of practical value to, put out a number.
Just to take it back a little bit to the deep tech space specifically and the European/US relationship. So almost 50% of late stage funding, especially also in the deep tech space in spin outs as well, has come from outside Europe, actually, so mainly from the US. So do you think the funding ecosystem is a problem, especially at the later stage? I mean, we've had a few founders and also other managers of funds on the podcast, discuss the US late stage funding and how developed it is compared to here. Do you think that's going to be a continued issue?
Yeah, well, there's just more risk capital in the US. But do I mind? I mean, personally, I think it's important that European companies find funding. Am I now completely focused? Well, the money needs to come from European investors or European pension funds. I mean, if they find good money and there's more risk capital in the US to invest in these companies, I think personally, I have no problem with that. I don't mind at all having American co-investors. The bigger concern is that the companies are then pushed to move their operations to the US. That's something as a European which I find less attractive. But capital is very mobile, right? Moves around.
Yeah, that makes sense. So you don't necessarily have an issue with having US investors on board, but it's more just moving the entire infrastructure over there.
Yeah.
Is part of the reason that they move over there at later stages, is that just linked to because then if the majority investment comes from there, they move? Or is it also maybe an issue with the regulatory system here?
Yeah, well, I mean, there's just, it's a bigger market. Take quantum computing, okay? So if you have a European quantum computer, a couple of it, they're very good research groups in Europe, okay? But as soon as they get a bit more mature and, start to work, you have the two fields. On the one hand, in Europe, you have a good chance getting, direct, indirect government money. So EIB and others would probably invest in along other investors. So that's an advantage in Europe. In the US, however, you get, there's a big competition from DARPA, US Defense, that basically selects the best quantum computing companies. I think they choose something like 8. And that's a real badge of honor. And if you can say you're selected by DARPA, basically it says, you're someone and you have a real technology. And then when these companies mainly sell to governments, so there it doesn't matter that much if you're European and US, but as soon as there would be more commercial sales, obviously the market is the US and US corporates take bigger risks. Typically, they take a bet and say, look, we're going to test that new technology. Maybe it doesn't work perfectly, but we will learn. That's unfortunately not a European mindset. So I think the main point is there's also regulation. Obviously, quantum is regulated and gets more and more regulated. It's probably also fair. But I think the main point in my mind is still, market size and, speed at which, customers would move and, test your products and buy them and, do something with you. It's just different.
And when you talk about markets, so is that just, the fact that the US has one language, or is it more also that there's so many different consumers? I mean, everyone in Europe speaks English, or a lot of people speak English, right? So, but then I guess when you look at marketing in a country like Germany compared to a country like the UK, the consumer buying behavior is very different. Do you think those are factors that come into play at all?
Yeah, since we don't do B2C, frankly, I don't care too much about end consumers and language. I mean, corporate speak English, so that is not my concern. It's more the risk appetite and wanting to do something new and just trying and spending some money on a new technology, testing it out. Yeah.
And just like
What
maybe
we're looking at, language doesn't matter too much.
in terms of like strategy, so I mean, I was reading a report like the First Momentum Deep Tech Napkin, which essentially says like 80% of the pre-seed deep tech companies are now raising capital at the very concept stage or even lab stage, and 30% of the Series B companies still have zero revenue when they raise. Do you think that maybe it's completely normal for that space, but do you think it's normal or is being super aggressive on the risk-taking side?
No,
I mean, as an investor.
For me, revenue in our deep tech and companies, revenues is a secondary consideration, to be honest.
So, like, so the way, so if that's a secondary consideration, I mean, what do you see your holding period? I don't know what the sort of length of your current fund is, but I mean, let's say it's 10, 12 years. If it takes you like 3-4 years to deploy, maybe 5 years to essentially start thinking about how do you essentially exit your positions before the end of the life of your fund.
Yeah.
Particularly if they don't generate any revenue. So maybe it's like, the biotech space where you essentially, can be acquired even though you don't, generate any revenue just because you pass some, phases of approval. Is it similar?
That is one, for enabling technologies, etc. It is being acquired. Eventually, they will have revenues. First, they need to have a competitive edge. So I'm really not. I mean, revenues in my company, it's good if they have some revenues because it's some evidence of traction and some evidence of that, there might be customers and that somebody is interested in technology, etc. But it's often also, in a certain way, don't get it wrong, but it's a distraction. So if you want to build the best quantum computer in the world, you can sell to a lot of government and research institutions, and you can do some pilot projects with some consulting companies or even some commercial company. And that's good because it gives you a bit of a feel what the market wants, but it can also massively distract you, right? And then you're focused on delivering today and you're not building the technology. I mean, at the end, we bet on these companies so that they build the technology of the future. So I want them. I don't mind obviously having revenues, but I want them to build technology of the future. Now, with exit, yes, it's one. Technology companies can be bought, but there's also I mean, in quantum computing, there's a wave of SPACs today. So many companies list on Nasdaq. Obviously, the European ones also list on Nasdaq. So you could monetize also via SPACs. There are different ways to monetize. So I don't expect to hold my whole portfolio for the 10-year lifespan of the fund. I think I can monetize earlier.
So to go back on the due diligence phase, I mean, it's hard and easy at the same time. Because, I mean, it's hard because you need the expertise to assess like the research and the product, but it's somewhat easy because you don't need to care about whether the funding team is has like commercial appetite, etc. It's very much like product.
I want hunger, I want drive, I want energy, I want I want these entrepreneurs to be outward oriented and to represent the company and to go to conferences and to get people excited. But I'm not looking at monthly revenues and churn rates. Yes, so in that sense.
And so on the quantum side, so when was that? Last September, NVIDIA, I think, invested like in a few quantum companies. I mean, including one of yours, QuEra.
Yeah.
If I pronounce it correctly. Can you explain maybe what you see in terms of momentum from like chip makers like to move toward the quantum space? I mean, you touched base on it very quickly in the sense that more AI, more computation power needed, which means also better computers needed. So that could be probably like the main reason. But if you could explain those moves a little bit, that would be quite interesting.
Yeah. Personally, I think NVIDIA is a bit of a special case. NVIDIA has right now so much money. So they just want to see all technologies in their space and want to see them involved. And they have obviously business development teams that want to understand, and they just need to be at the forefront. So they put a couple of million, can't say how much, in QuEra, but I guess for them it is more, it gives them an opportunity to look a bit, to peek a bit. I mean, even so they're not on the board, to get a bit of a opportunity to learn what these companies are doing. And, almost all companies in the future of compute that we see at some stage, get approached by NVIDIA, and some get investments, some don't. I wouldn't overemphasize that, because they're just putting a broad blanket to try to see if something evolves and be able to be the first one to move. The bigger investment in that company actually is Google. And Google has a long history of investing in quantum computing. So they're probably more strategic, I would argue. And they traditionally did invest themselves, have big research groups in one technology called superconducting quantum computing, where they published also a lot of papers. And that was more interesting. That was probably more strategic, because QuEra has a different technology. It's based on cold matrix. And the fact that they put next to their own technology that they're betting on more sizable check. They're also the bigger investor in a cold atom company, probably shows more, right? That they're not 100% sure that the technology that they've been betting on for the last couple of years is the winner. Maybe technology that QuEra uses might be the winners there.
And so is it a good thing, like, to have like players like NVIDIA in the market? I mean, just like my thinking is like, so you invest like, 1 to 5 million per deal. I mean, with the idea to follow on afterwards. I mean, when you have like a company like QuEra who that raised like certainly like 200 million plus, in terms of quantum, like, how did you approach that really? I mean, did you exit part of your investment, because in some way it bumps valuation super high? So I mean, in the cap table, I mean, there is some dilution happening. So if there is like an exit, a few years down the road, I mean, how do you manage essentially valuation? Like, I mean, if there is a down valuation, I mean, it's obviously not great.
So I mean, in that specific example, we came in much earlier, before this 200 million round. Obviously, we were the first investor. So obviously for us, it's great, that they suddenly could raise at a much higher valuation, 200 million US. We could not, as a 100 million fund, we could not take our pro rata, obviously. That's too big the risk. What we did is we offered to some of our LPs, but also broader network, an SPV. So we set up an SPV where we, invited people who want to do a specific bet on QuEra to co-invest at the same conditions as the Series B, the other Series B investors. So certainly we gave it as a gift to our LPs and to our network. We're not planning to sell. That is clearly, we believe this will be a multi-billion-dollar company, but we could not follow, and we gave it to our LPs and network. The
makes sense
to invest.
Makes sense. I mean, speaking about your LPs, so you recently closed a fund, one at 110 million. Do you mind just walking us through how that process was for raising that? I mean, we've heard from some other other GPs that it's quite a tough environment at the moment. I'm sure that it's only getting tougher with everything that's happening in the Middle East, but maybe you weren't affected by that.
Yeah, well, we closed before that, but I mean,
okay.
The way it worked, I mean, we were fortunate because when Serge, so my colleague there, said we set up the fund, he had a certain private portfolio that built, like QuEra was actually one of the companies in there, and he gave this as a warehouse contribution. So basically, we didn't start from an empty piece of paper, but we had a warehouse, let's say 10 companies or so, that he contributed in kind, basically as his LP contribution into the fund. So that was good, because then you're not coming, well, first time fund manager, you have a great idea, very difficult to find LPs, but we had a portfolio and we could talk about companies that were in that portfolio, and some were exciting. There were 2-3 very exciting companies in there. And second, I mean, both Serge and I have a private network of, entrepreneurs, family offices, wealthy individuals. So we decided for Fund One that we will basically approach our own personal network and win them as LPs. Where basically, so you have a anchor portfolio, the warehouse portfolio, and you have certain trust people that you worked with for many, many years. And we raised, around that. So we don't have institutional investors in Fund One. Fund Two might be different. And as always, at the beginning, it's difficult. And then once you're at a certain threshold, we were at 70, 80 million. At the end, we had more people wanting to come in. So we had to close because we didn't want to make the fund too big. So it's always like that. But the trick was having a personal network and having, anchor portfolio that was good. So you could talk about portfolio companies.
And I guess it's always sweet to be able to raise like a 70 million friend and family round.
Yeah,
I guess.
Okay. It's not special friend of family, yes.
You have very good friends. I want to be invited to the next beer.
Yeah, okay, but first capital call is not the full fund, right? So, and I'm happy to invite you. Come over.
So you mentioned probably like a Fund Two, maybe like fast forward 2030. I mean, what's your vision for Constructor Capital? I mean, what size of funds you think would be correct? And by 2030 or 2035, what size of team? Where do you see essentially the business going in the next like 5 to 15 years?
Okay. Yeah, look, I mean, Fund One, 110 million, we deployed about 40. We have a bunch of larger investments in front of us that we want to actually still do this year. So we will probably go relatively quickly to 60, 70 million deployed. And then we need to leave some reserves. As I mentioned, I don't want to leave too much reserves. I mean, the reserves are more for companies that we need to. The big winners we will do like with QuEra, we'll do an SPV. So we will not deploy in Series B and C and the big winners with the current fund. So that means actually that we will need to raise Fund Two relatively soon. We want to make it obviously bigger, aiming 300 to 500 million. And at the moment, we're more exploring, especially with the deep tech theme and more, institutional investors wanting to jump on deep tech or quantum tech or, photonic future of compute more broadly. We want to see if we want to start Fund Two together with a institutional investor as an anchor. So we're talking to, a bunch of these institutional entities in Europe, in the Middle East, in Asia. I think that could be Fund Two, more of an institutional anchor investor. Obviously, we invite again, friends and family. But as you said, Thomas, the friend and family with 500 million fund gets more difficult. So it will need to have a bit more.
It depends on your friend. It always depends on your friends.
So that's the idea. So we didn't really start yet, but we're having a bunch of conversations.
Okay, that makes sense. And so just going back like to a few companies you have in portfolio. So you led the round for a company called Lumai, which Oxford spin out, which is claiming like 50 times the performance of silicon, for 10% of the power. My question is like in practice, I mean, I know you have like some experts, etc. But in practice, how do you test that? Did you do like some really hardcore tests, or it's more like people, scientists, like looking at the research paper and saying, okay, that actually can work? Or do you have some sort of prototype where you see it works? How does that work really?
Yeah, I mean, it's a bit of a combination. So basically, if you talk about Lumai basically builds a photonic computer, so laser-based computer. You would do compute, not electromagnetic, but you would do it with lasers, okay, and mirrors, lasers, etc. And it's a relatively narrow use case. What they do is basically matrix multiplication. Now, that's what they developed technology for now. The core of AI is matrix multiplication. So don't need to worry about the market size. The market is big. Lasers are obviously faster and more energy efficient than traditional chips. So use case and market is clear. Don't need to spend time on it. I mean, what we spend time on is, it's a professor in a research group in Oxford. So really looked at the history of the research and the publications and the scientific traction that they got when they presented at conferences. So it's more the research base and what is opinion of other experts in the field, et cetera, et cetera. And then you look at the lab, obviously, as well. You don't do this research only on paper. So they have a lab and they have some prototypes in the lab. So we want to see, how this looks like. And obviously we want to touch and feel it and see a bit the equipment and how they organize themselves. Can we do benchmarks? No, we can't. This is too early. But it is a lot of scientific track record publications, reputation, etc. Plus seeing what's happening in the lab, measuring is probably more difficult. Okay.
Mm-hmm. Okay. And so, like, in terms of like founder selection, like, so what would you say is the main reason you say no, typically? You mentioned that you were looking for drive, etc. But and generally speaking, well, if we put aside like the sort of research and product, what's the main reason why you would pass on an investment opportunity?
Well, often these founders in this deep tech, they're really scientists, and they can learn the business side, but they need to be interested in that. If you feel that they really want to run a research lab, building a company is different, right? You need to move from research to product to customers to. So if you feel they really, the only purpose is to get the next grant and write the next paper, it's probably not good. It's probably very good scientists, but not good entrepreneurs. So we're looking a bit for hunger, curiosity, willingness to become more broadly interested and expand. Obviously, intellectual capability comes almost automatically if you're a researcher in these top labs. You're a smart person, so it's more the drive, the curiosity, the willingness to. We feel a willingness to build a company and not to get stuck in research.
So on this, you would say that the majority of the time where you say no, so you validated the research, the product potential. When you say no, it's because you don't feel that there is a commercial drive.
Yeah, or the willingness to build a company and they just want to continue to do research. But 90% fail on the previous part.
Okay. So that's really like last mile.
That's the last mile, 90%, they think the research or the technology is distinctive, and we figure out actually it's not that distinctive, right? Honestly, this is also where we spend 89% of our time on, and then we look for the cherry on the cake that we believe. In the worst case, you could hire a CEO if the technical founders would accept that the technology is really that distinctive. So.
Okay. And so still on the founders, like what have you most changed your mind on in the last 12 months, about what makes like a great deep tech founder?
Last 12 months.
Maybe longer. It doesn't have to be 12 months. Essentially some sort of conception you had like of a deep tech founder. And so after like meeting hundreds of them, you essentially change your mind on.
I don't know.
Maybe what makes like a great deep tech founder?
Well, a scientific rigor, real knowledge, interest, curiosity in the technology, real willingness to push it. And then on top of that, willingness to, go outside of their comfort zone, building a company, building a team, being able to build a team. Typically the teams in research are very small. If they build a company, become much bigger team. And there has been also where we believed all that is there. But then, these founders got, for example, overwhelmed by the complexity, because suddenly, you run a company, you have 30, 40 people. I mean, you wake up, you have 400 emails in your inbox, and, things left, right, center, regulation, fine. So sometimes I'm surprised, this is on the negative side, that these founders who are so smart, right, can't deal with complexity. But sometimes it's the other way around. I mean, did something fundamentally change? No, I think the intrinsics that we're looking for have not changed. The field is more exciting. More people are interested in deep tech. I mean, that's the good thing about NVIDIA, right? Suddenly, I mean, 10 years ago, nobody cared about hardware, computer hardware. It was a commodity, right? There were 2, 3 players with Intel and AMD, and margins went down, and all the excitement was on the software side. Now look at it, the whole industry is dominated by, and the profit pools are dominated by the hardware player and the scientists. So that is exciting. People
it's
realize,
interesting.
actually, yeah.
But it makes it a bit more complicated for others to come up with good ideas that truly makes a difference, and not.
Absolutely. You don't wake up and say, I'm going to build a NVIDIA competitor.
Yeah, no, it's a bit hard. And then you end up starting a new software which essentially provides some marginal improvement, down the road.
Exactly. So that path, yeah, it's exciting for us, because this is the field that we want to invest in. Many of the would-be entrepreneurs have to realize that they maybe don't have the opportunity. It doesn't lie where they have their expertise.
Yeah. And so competition-wise, for you, I mean, are there a lot of investment firms? All the universities have their own sort of investment arms, but I mean, do you see independent players playing in the same sort of court?
Yeah. For example, one fund that we work quite a bit with is Photon Ventures in Netherlands. There's a fund in Italy that we work quite a bit with. There are 10, 15 relevant funds in that space in Europe. And we like to collaborate.
So yeah, I ask a few questions about why you say no. So, but what do you do to seduce essentially the team of researchers? They tick all the boxes: good research, good potential product, a strong commercial appetite. They have a few funds in front of them. And what do you tell them to say? Look, guys, you need to partner with us.
Well, a couple of things. So one, they will learn through our due diligence that we have real expertise in their field. So typically they like that, right? I mean, we will not come with the high-level questions and market size and blah, blah, blah. We will drill on them on technology. Typically, these people get excited about that. Other people who are maybe in the business world can talk to them quite some depth about their technology. So that's...
Okay, so it's really the intellectual challenge, etc., that excites them.
That excites them, yeah. Second is, obviously, we have a network. I talked about Constructor Group, the university, and software company. And then if I take again Serge, he founded 4 unicorn companies, so he knows how to take a technology and build a company out of it. You can learn a thing or two. For some of them, it's also relevant, my McKinsey background and the fact that I can probably connect them to the corporates, or help them think how their potential customers think about their technology. It's a broad set of offerings. I mean, next to money, we can help them with. But typically, we get relatively seldom a no, and if the excitement typically comes from the fact that we understand technically what they do.
Okay. So one more question that comes to mind, so is it natural for you during the holding period to organize maybe meetings with big corporates and say, just so you can explain what's being developed and get some sort of feedback, etc.? Is it something you do a lot or not really?
Less, to be honest, because the corporates don't know what they don't know. It's probably too early stage for them. So it's not the typical source of intelligence that we're looking for when we do a DD.
Okay. No, makes sense. Look, maybe one last question, and then we let you go. If we had to invite, someone on the show, who would that be and why?
Okay. And okay. In terms of scientists, I would.
I mean, someone, maybe, I don't know, founders from, your portfolio, co-investor.
Since you're more European, maybe invite the CEO of Lumai. That's a good one. Super talented. In terms of scientist, you could invite the founder of QuEra, one of the 3 founders of QuEra. There's professors in Harvard, MIT. All 3 of them are amazing. Really, really, some of the most amazing scientists I ever met. Yeah, that's maybe.
No,
Yeah,
but that's
that's good. I mean, it's basically cloudification of AI called G-Core. They're already relatively sizable, revenues more than 100 million. If you want to talk about, and it's a European champion. If you want to talk about European champions in AI, you might invite the CEO of G-Core. That's maybe 3.
But that's perfect. But look, Matthias, thank you so much for your time. I mean, it was great to understand a bit better the deep tech space and, through your eyes. So thank you so much for your time.
Okay.
It was really a pleasure to have you with us. And I wish you all the best for Fund 2.
Thank you. Thanks, Thomas and Marcus.
Thanks.
Great
Thank
session.
you. Bye.